Hey guys, hope you're doing well. Haven't done a video in a while and I thought I'd share this view here with you. Beautiful morning, beautiful weather, and unfortunately not the most beautiful best news, right? We have a quite jumpy market. It goes up, goes down. Obviously it always does, but to a bigger extent than it usually does. So what is going on here? So guys, what I want to talk to you about today in the short video clip is that a lot of people base their trading decisions on technical analysis alone. You know, like some line here, some Fibonacci there. And in reality, the impact or the things that really impact the market are very different dynamics. And it's really important that if you want to, succeed in your trading strategy, that you understand. If you prioritize technical analysis over fundamental drivers in the market, then you end up being eaten by the market. Like especially this year is going to be very conflicting, and especially risk sensitive assets, whether it's gold or even the stock market or crypto, they will have a lot more volatility because of exactly those dynamics. So whether it's inflation, like how tough is the Fed going to act? How are other central banks going to act? Then you could also arbitrage let's just say the progression. If the US Fed starts, when will the ECB go after that? And then maybe you could see how the dollar and the euro dynamic actually behaves because of that delay, which may bring you interesting trading opportunities. Then what about this debt thing? If they increase the interest rate, can they really continue to service all this debt? And if they cannot, then probably risk assets will go down a lot, because the valuations of a lot of the companies in the stock market are extremely high after 10 years of consistent money printing. So these are a lot more factors that will impact the price of a stock, the price of gold, the price of a currency than a line and a technical analysis line, right? War. We've been now stuck in this situation, Ukraine war, not war, back and forth, which obviously adds a lot of shakiness to the market. And it may flip-flop from one moment to another as there are new or different news or developments about that. So you really have to master your fundamentals game. You need to read news, you need to understand the impact of the news. Are we in a risk-taking environment, or are we in a risk-averse environment? Are we in a contraction? Are we in an expansion? These things will help you to then use technical analysis as a framework within that. So the fundamental drivers, they supersede the technical analysis. And again, if you prioritize the technical analysis higher, then you're bound to lose, seriously. Another thing is that there's so many things that are out of the balance that we have seen being in place for many years. Commodities going up, the cost of everything is rising now, and this is what's causing inflation actually at the end of the day, which means the cost of capital. And so probably we will see that central banks will act. But often they also just, they tell they will do something very, very strong, and then the market already reacts, it prices it in. So you also have to get a feeling of what might be priced in already, what isn't. And there's for example, the Fed Fund futures and other metrics that can help you to see what is the market expecting. And then as you combine these things, as you, put them together, and then have a sound risk reward, and then technical analysis to have a guideline within all of that framework, then you have a much higher chance of making choices that actually, going to get you to a place where you can be successful with. So it's really important that you understand these things. And if you want to learn more about this whole fundamental thing, then I really encourage you to start with news, financial news first, and try to understand what do they actually mean. How did which news impact which market? Does it impact the market that you are interested in, that you are looking at, that you're trading? How does that really impact your regular strategy? How did that impact or screw up with your technical analysis that you typically use? So you need to really connect dots, and that in a dynamic way. And then, you will see a lot more things that are actually happening, because the big players in the market, they react to those things, and they are the driving power in the market. They're very happy to take your money for it. You donate basically your trades to the market if you ignore these perspectives, which are a lot more the reality of things than a technical analysis. Technical analysis is such a little dimension in the whole scope of things. So I really wanted you to understand that, and I'll leave you here with this beautiful skyline here behind me, and I'll see you in the next video. Bye.